Howdy, Jacob here. Today we're looking at Lantheus Holdings in the healthcare equipment and supplies industry. 4.4 billion market cap on just under 4.3 billion enterprise value. Been around since 1956. They manufacture, develop, commercialize diagnostic therapeutic products that assist clinicians in the diagnosis and treatment of heart cancer and other diseases worldwide. Growth was crazy post-COVID. I wonder if they are COVID related, maybe, possibly. I don't see that initially, but huge growth post COVID. It looks like there was essentially flat growth, 1 to 2% a year for 8 years, and the last 2 years have been astronomical growth. And that's everything. Gross margin from 42% to 54%, operating margin from 13% to 28%, revenue from 300 million to 1.3 billion. So pretty interesting there. It looks like outside of this year, though, their earnings per share has been very low. Margins have been consistently mid-teens before COVID, and then post-COVID actually went negative for 2 years. So pretty volatile recently. You know me, I like doing my averages when it comes to assumptions, so that's something I'll definitely be pointing out. It looks like they acquired a business. So 714 million cash on hand, 1 million short-term debt, 562 million long-term debt. They have the cash to pay off their debt. No concern there. I don't think there was an acquisition. It doesn't look like it. Oh, what is this other? 93, 94, 78. Okay. Free cash flow, interesting. I mean, it's been positive every year for the last 10 years. So free cash flow is definitely more consistent than earnings. Use of free cash flow, what is this other? $258 million investment here. They issued quite a bit of debt. I mean, it doesn't say it's an acquisitions, but I presume that this would be an acquisition. I don't know how else the business would have 130% the revenue year over year. And the balance sheet gained so much cash, quite a bit of accounts receivables. I bet there was an acquisition there that's not showing under there for some reason, but that's the thing that's tough about acquisitions, especially acquisitions that create a huge difference in earnings and free cash flow for a business. It's, I like long histories. Long histories of data is going to be the most reliable thing to make your forecast with. And so if there's a big change in the business and you know it better than everybody else, then obviously you can arbitrage the situation due to your understanding of the business. But if you have just the numbers that you're looking at, then, it's just very tough. So I will say initially, I do a numbers analyses and it's just going to look a bit off, I bet. But if you understand this business, I definitely look at the business they acquired and, what makes sense. Like, do you think it makes sense for them? Does it not just increase the revenue, but increase margins, increase this, that? And initially, again, looks like it definitely increases margins. We're seeing huge jumps in gross and operating margin, but is this consistent? Was there some fluke event? Was it the peak of cyclicality of this business or the business they acquired? Just some things you have to look into. But let's make some assumptions on my end. I don't know. I don't know. I hate this. Because I don't know, I did my 3% revenue growth, 13p price free cash flow. I did that because, the business is going all over the place. I just don't know how reliable this percent growth is when historically they were doing low to mid single digits. That's just, it doesn't seem like this is going to hold forever. For margins, I'll just do what their average is. So let's do 9, 11. Share changes have actually increased it, probably due to stock-based compensation. So 50 mil, a little bit of share issuance as well, but 50 mil in relation to here, 1%. I guess let's do 1%. Oh, it looks really ugly. So, I mean, if you know this business better, you're going to have an advantage. If I were to do a little bit more research, I think it'd be a lot easier to come up with figures that are more reliable. But to me, I want deals to be screaming out at me without even doing more research. And I mean, obviously, I'm not going to invest without doing that research. But this is the type of business that it doesn't scream out to me that's a screaming deal. I think their revenue growth makes me so much revenue growth in the last 3 years makes me hesitant that it's going to keep going like that. And I know it's not an oil, gas, consumables business where, I mean, you can see 100% growth and then the next year 30% fall, which is almost offsetting entirely what the rate increase was. But here, I mean, I just don't know what it was, and it's annoying that they don't show it was an acquisition, so I can't necessarily decipher that was the case, but I do presume that this was an acquisition. It's just for some reason it's coming up in the other portion of the cash flow statement. But anyways, looks like it needs to fall quite a bit before I'd be doing more research on it. There's just too many companies out there for me to be wasting my time on something that isn't screaming out at me. So hopefully you enjoy the video. Have a great rest of your day. Thank you.